Ever wondered what are the components of real estate sales closing costs for buyers in Florida? Well, you're not alone. These costs are a vital part of every property transaction, but they're often overlooked or misunderstood. Let's simplify it. Closing costs are the expenses over and above the property price that buyers and sellers usually incur to complete a real estate transaction. These can range from loan origination fees to title insurance and taxes, and can stack up to a significant sum, often into thousands of dollars. Whether you're stepping onto the property ladder for the first time or are a seasoned real estate buyer, it's essential to understand these costs. After all, knowledge is power, and understanding closing costs can help you budget effectively, steering clear of any unpleasant surprises at the closing table. So stay tuned as we break down the components of these costs with the buyer's side of the equation. Generally, the contract you sign to buy real estate will stipulate who will pay closing costs and is a negotiable item within the contract. Depending upon where the property is located, it can be standard practice to have the seller pay, but in other locations, the buyer may pay. However, remember that this is negotiable within the sales contract you signed to purchase the property. Whoever pays for the owner's title insurance and related costs generally gets to pick the closing company. If you're a cash buyer, you're in a pretty good spot. If the seller pays closing costs, your closing costs are minimal, often limited to recording fees, and possible adjustments to taxes that the seller had previously paid, and maybe a closing fee. You've got the option for an inspection, appraisal, survey, or insurance, but these aren't mandatory expenses, so you choose whether you want any of these and the related costs. Now, if like many people, you need to borrow money to buy the property, you'll encounter several fees which will amount to thousands of dollars. Your bank or lending institution will charge you for processing and finalizing your loan. These fees can include an origination fee, a credit report fee, and an appraisal fee. And don't forget the possible survey of the land, which is a separate cost. So, while cash buyers have a smoother road, mortgage buyers will need to navigate a few more financial speed bumps. Again, when we talk about buyers' closing costs, we are assuming the seller is paying closing costs. Note that the closing costs to sell a property are completely separate from buyers' closing costs, so don't get them confused. The bank or lending institution providing your mortgage will typically charge certain fees to process and finalize your loan. These fees, often referred to as lender fees, can vary widely depending upon the lender and your creditworthiness. But let's break down the most common ones you're likely to encounter. First and foremost, there's the origination fee. This is essentially what your lender charges for making the loan available to you. It's usually calculated as a percentage of the loan amount and can range from 0.5% to 1%. Next, you'll encounter the credit report fee. This is what you pay to access your credit report from the 3 major credit bureaus. It's a critical step for lenders as they assess your creditworthiness before approving your loan. This fee typically hovers around $50, though it can vary. Then, we have the appraisal fee. This is an essential step in the lending process as your lender needs to confirm that the property you're purchasing is worth the amount you're borrowing. To do this, they'll send a licensed appraiser to evaluate the home's value. The cost for this service usually ranges from $350 to $650, but can vary. Additionally, a survey of the land may also be required. Depending on the size of the property, a survey usually costs around $650, but can go much higher for larger parcels or under specific circumstances. Beyond these fundamental fees, there are several others you might encounter. For instance, you probably will pay for title insurance fees to protect the lender, closing fees, processing and underwriting fees, well and septic inspections if necessary, flood certificates, termite inspections, courier and attorney fees if needed, HOA application and transfer fees if required, recording fees and expenses, and a variety of other costs. As you may have guessed, all of these fees can run into a substantial amount of money. Be sure to ask your lender for an estimate of closing costs if they don't provide it. By law, they must provide this to you, so don't hesitate to ask and ensure you understand all the costs associated with buying real estate. Understanding these fees can seem daunting, but remember, they're all part of the process of securing your dream home. By familiarizing yourself with these costs, you're arming yourself with the knowledge to navigate the home buying process smoothly. And just you thought we were done, let's move on to additional costs involved. Now, let's talk about interest charges. Interest charges are a significant part of your monthly payment as well as the closing costs. When you take out a mortgage, you're not just paying back the amount you borrowed. you're also paying the lender for the privilege of borrowing that money. In essence, that's what the interest is, the cost of borrowing. Interest is usually expressed as an annual percentage rate, or APR. This rate can vary widely, and it's influenced by a number of factors. Your credit score, for instance, plays a substantial role. A higher credit score often equates to a lower interest rate, because lenders see you as a lower risk. The current market rate also factors into your interest rate. In periods of economic growth, interest rates tend to rise, while in periods of economic downturn, they often fall. Finally, the type of loan you choose can affect your interest rate. For example, fixed-rate loans often have higher interest rates than adjustable-rate mortgages, at least initially. It's important to note that these costs can significantly impact the total amount you'll pay for your home over the life of your loan. Also, be aware that sometimes when a lender offers you a lower interest rate than competing lenders, it may be because you will be buying down the interest rate. In other words, you would pay extra upfront to get the lower rate. Ask the lender to show you the difference in costs upfront, monthly, or over the life of the loan, so you can make an informed decision. Now that we've broken down the individual components, you can see how they all add up to form your total closing costs. Let's do a quick recap. If you're fortunate enough to pay cash for your home, your closing costs will be minimal. You'll only need to cover recording fees, tax adjustments, and other minor closing fees. Optional costs include an inspection, appraisal, insurance, or survey of the property. But remember, these are optional costs and you are not obligated to have them done. On the other hand, if you're like most people and need to borrow money to buy your home, your closing costs will be more substantial. The lender will charge an origination fee for processing your loan, which typically ranges from 0.5% to 1% of the loan amount. Then there's the credit report fee to check your creditworthiness, which usually hovers around $50. The appraisal fee, used to ensure the home's value matches the loan amount, can range from $350 to $650. A survey of the land will also be required, and its cost can vary greatly, typically starting around $650. Other fees can include title insurance, closing fees, title search, examination fees, well and septic inspections if necessary, processing and underwriting fees, flood certificate, termite inspection, courier fees if needed, and various other fees. Don't forget about interest charges. This is the cost you pay for the privilege of borrowing money, and is expressed as an annual percentage rate. It varies based on numerous factors, including your credit score, the current market rate, and the type of loan you choose. As you can see, closing costs can vary significantly depending on whether you're paying cash or taking out a mortgage. Plus, the impact of interest rates can't be overstated. It's a complex process, but understanding each component can make it much easier to navigate. Understanding these costs can help you budget effectively and avoid any unpleasant surprises at the closing table. Remember, knowledge is power when it comes to navigating the home buying process.